Welcome to this episode of Top Echelon TV. I'm Mark Demery, and in this episode, we're fortunate enough to have Debbie Fledderjohann, president of Top Echelon Contracting, with us. And Debbie, every so often, we'll get questions from our customers on what's the difference between a 1099 contract employee and a W-2, and when should you do that? So we thought, well, the best way to answer that question is ask the expert. So let me ask you, straight out, what is the difference between a 1099 independent contractor and a W-2?
Okay, Mark, that's a great question. We get that question in our office on a very regular basis, and there are occasions when you can classify a worker as an independent contractor, but it's not the norm in today's society, and the IRS is actually doing a huge crackdown on this issue. They have a new incentive. It's called the 2010 IRS Employment Tax National Research Project. They've actually hired 2,000 auditors to go out there and audit companies for the next 3 years looking for employee misclassification because of the huge tax dollar gap. So the main differences when it comes to employees, which we're classifying them as workers now, versus a true W-2 employee, goes to the tax situation. If someone's being paid as an independent contractor, the client company is not paying into federal unemployment tax, they're not paying state unemployment tax, they're not paying into Social Security and Medicare, they're not paying into unemployment for the worker, and they're not paying into benefits. And most importantly, there's no workers' compensation coverage. So from an employer's perspective, or the client company, there's a huge tax savings. But then from the employee's standpoint, the worker is not paying federal income tax, they're not paying into state income tax, they're not paying their share of the FICA, which is the Social Security and Medicare, and they don't have access to unemployment, workers' comps, or any of the medical benefits, medical, dental, vision, life insurance, those sorts of things.
Wow. Well, let me ask you then, how do you know, right, with all of that, how do you know when to pay an employee or somebody on a 1099?
Okay. It all boils down to the right to control the daily work scope and control the worker. There's 3 IRS factors. The first one's behavioral control, and that involves how the work's being performed, where it's being performed, when the work is taking place. Additional factors, what tools are being provided, and is there any training involved for the worker? That's the behavioral control. Then there's financial control. That deals with, is there a significant investment on part of the worker? Are there multiple clients for the worker? The cost of business expenses, is the worker being paid as a flat fee for a job done or an hourly basis? And then will the worker actually suffer a loss if something goes wrong in the project? That's the financial part of it. And then the relationship of the parties. What's the tie between the two parties? Is there a contract? Are there benefits? What's the duration of the assignment? And then what's the normal business process involving the termination or any disciplinary issues? So that's the relationship. We talked about financial prior to that, and behavioral. That's what the IRS is going to look at to ultimately determine who has the right to control the daily work scope.
Interesting. You know, one of the questions that many recruiters have is, who's at risk?
That's a great question. We get that a lot. And really, all parties could be at risk. It depends on what the IRS determines when they go through the behavioral points that we just talked about, along with the financial points in the relationship. So the end client could be at risk, the recruiter could be at risk, and the candidate could be at risk. And there's taxes involved, penalties, fines, and everything.
Well, if there are some penalties and fines, another question I think that recruiters may have is, what triggers an audit in this situation?
Okay. Very basic things. The worker claims unemployment benefits when they don't have them. There could be an injury on the job, and the worker goes and claims workers' comp. Sometimes you get a little bit of a disgruntled employee, and they'll actually notify the Department of Labor that they're not being paid, say, for overtime. Those are some common ones. One that we see in our industry is when the contractor is going to work at a client company as a 1099 independent contractor, but the individual is going to convert to a direct hire and be a W-2 employee when they convert to a direct hire. So that individual is going to be filing both a 1099 with that company and then a W-2 in the same tax year. That's a huge red flag that we see.
Wow. Well, good. Well, I appreciate that. Are there any closing comments or anything else do you think everybody needs to know?
Yeah, this just is not just a tax issue. There's other benefits involved. There's FMLA, so there's leave issues. There's ADA for disabled individuals. The overtime pay, we briefly mentioned that. And I'm not an attorney, but I've been doing this for 18 years, and we've been involved in IRS audits, and we have not had any fines or penalties. And actually, less than 1% of our business is actually 1099 independent contractors. So there are a few cases where it's valid, but in most cases, we pay everybody as a W-2 employee of Top Echelon Contracting.
Well, good. Well, Debbie, I appreciate you joining us and spending some time with us.
Thank
I
you.
appreciate your wealth of knowledge. I know firsthand that if you want to know anything about contracting or the ins and outs or the legalities of it, is to really come see you or call Top Echelon Contracting. Well, Debbie, again, thanks. I appreciate your time.
Thank you.
And that ends it for another episode of Top Echelon TV. Have a great week.